Naked Forex Trader, and I want to talk today about the drawdowns. We know there are three things that we need to make money trading. We need a system we believe in that we know makes money. We've back tested and we have confidence in it, and it makes sense. It's not doesn't use lunar cycles or something that you don't believe in. If you don't believe, maybe you do believe in lunar cycles. I used to trade the Euro USD, and I was convinced that the new moon was when there would be a high or a low. And I went back on the charts and I looked at it, and it seemed like there was, not always, but it was a pretty good predictor. And I thought that was really interesting. I don't trade that way anymore though, but because I don't believe in it really. Number two thing is our risk management rules have to help us achieve our goals and avoid the pain we want to avoid as traders. We're going to get into that today. And then the number three thing is psychology and focusing on execution. And how do we do that? That's something that I've been spending a lot of time thinking about this month, really, or last month, I should say. And so that's a big deal, I think, for traders, is learning how to focus on what's important, which is the execution of your strategy and not the results of any individual trade. Hey, Yam, welcome aboard. Glad to have you here. So let's get into it. So the deal with drawdowns is that we typically will look at them in terms of the average drawdown. And I think that's incorrect. I think we should get a little bit more aggressive with our projections. So if you use, for example, like Monte Carlo spreadsheets or anything like that to project what may happen, as I do, once you get your stats for your system, then you're probably aware of the fact that when you use Monte Carlo strategies or Monte Carlo tests and runs, you're going to get different data depending on what kind of input you put in. If you put in 700 runs, 300 runs, 100 runs, 1,000 runs, or what have you. So what I want to do right now is shift over to this. I'm going to show you how you can do this with the old risk calculator. So go to the risk calculator here, and I'll share my screen. It's going to look a little bit funky here, but then it'll be all good. So you go to fxjake.com/risk. Oh, by the way, before I forget, I've got a free class for you. It's called nakedtradingclass.com. You can go to nakedtradingclass.com and figure, I've shown you there's three ways to ramp up a trading account quickly at nakedtradingclass.com. All right, so let me talk about how you can do this. Let's say that I've got a 42% win rate, and I've got a 2.4 reward to risk ratio, and I'm going to risk 2% on any trade, and I want to know if my drawdown is going to be 30%. See, when I calculate this, it's basically telling me I have like a 99 or 98% chance, 97.9, 97.8, 97.9% chance of avoiding this horrific 30% drawdown given my trading system stats. 42% win rate. I'm risking $1,000 to make $2,400, and I'm risking 2% of my account using fixed fractional, of course, which may or may not be the best system for you. We talk about other methods, right? Actually, we talk about other methods in the class at nakedtradingclass.com. Anyway, so what if I just change one thing here? Instead of looking at 100 trades, what if I look at 1,000 and I calculate the probability of that drawdown? It jumps up to 22.2%, 23, 24. So what's happened here? I'm trading the same system, 42% win rate, 2.4 reward risk ratio, 2% per trade is at risk, and yet my drawdown, my horrible drawdown that I'm trying to avoid, I basically have a 1 in 4 chance of hitting it now, whereas before I had a 98% chance of avoiding it. Well, what's changed is the number of periods. And the reason why I always use 10,000 trades. Now, is it likely that I am going to run through, and look at what happened. Now I have a 94% chance, 93% chance, 96% chance of having that 30% drawdown. So what this forces me to do is become more conservative. And the reason, and that's why I'm showing this to you. The reason why I think you should become more conservative is because this is not something that is going to help. We know that most traders quit trading a strategy because they run into a terrible drawdown. That's fact. Okay, that's the number one reason why traders quit, is they keep losing money. Number two is I can control my drawdowns if I'm using fixed fractional risk management, which most traders are in futures and Forex. And number three is I can also tweak my strategy. So there's a couple of things that are important here. I can tweak my strategy, which is usually the number one port of call for traders when they run into issues. They think, oh, I need to change it and I'll get a better signal or something. And I'm here to tell you that it's probably not the entry. You could drastically change your system by looking at the exit. I think that can be fruitful. But the other thing is you could just change your risk rules. And so in the video, in the on-demand training at nakedtradingclass.com, you can see how you can use one method that's not fixed fractional, where you're not risking 1% per trade or 2% per trade, and drastically affect your results as well. There are pitfalls there, of course, but you can learn all about that at nakedtradingclass.com. So the important thing I guess I'm trying to get across here for you is this. If you want to avoid the catastrophic drawdown, which is the reason why most of us stop trading, most traders stop trading because of the catastrophic drawdown. The best way to do this is to overestimate the likelihood that you're going to hit it. And the best way I know to do that with the risk calculator at fxjake.com/risk. I'll put the link below or above this video for you so you get that. But that risk calculator, the best thing I know to do is just bump it out to 10,000 trades. Even if I know that my trading strategy gives me like 20 signals a year and I'm at best going to trade, 500 of these bad boys before I'm wearing the dirt tuxedo, right? Even if that's true, I should still use 10,000. Why? Because the market has a huge amount of volatility. And if you use normal parametric based or normal curve based statistics, which that formula does, by the way, that's at that page, fxjake.com/risk, then I am going to underestimate the likelihood of a severe shock to the financial system and the likelihood that I'm going to get gapped over some trades or slipped or whatever. Something like Franco-Geddon, for example, or the flash crash we had on the Aussie and the yen 2018, early 2019, that sort of thing. Okay, so hopefully this helps. If you'd like to learn more about building a small account quickly, go to nakedtradingclass.com. I'll see you in the next video, and I wish you happy trading. Naeem says, if I wait and trade the 4-hour time frame for systems like Big Shadow, Last Kiss, Darvas Box, Kangaroo Tail with good money management and rumors, what will be the result? Naeem, it depends. I mean, I would not be looking at it that way. What I would do if I were you, I would back test it in Forex Tester. You can go to fxjake.com/tester and get Forex Tester, or just go to their website, forextester.com, and check that out, because your results are going to differ depending on how you trade those strategies. It's not like we're all using the same EA or something like that. Even if we are using the same EA, we're going to get different results. So hopefully that makes sense. Okay, see ya. Bye.